Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. It's a TGIF, and you get a long weekend to boot, folks. Let's make it a great one. Let's take a look at one of our 4 agreements. Miracles happen when you forgive. You are born with the capacity to forgive, but you learn the opposite behavior. You learn not to forgive, you practice not to forgive, and you master not to forgive. When you learn to let go of your pride and ask for forgiveness, miracles start to happen in your life. Market-wise, let's take a look at it out here. We had the Dow Industrials down 30, NASDAQ off 30, S&P's off 8, gold contract down $18.20, trading at $1,394 an ounce. Silver down 65 cents at $23.43 an ounce. Platinum flat at $1,520 an ounce. Copper down a penny and a half at $3.22 a pound. Light sweet crude off a buck at $107.70 a barrel. Bonds down 10 ticks at $132.26. King dollar up 102 ticks, trading out at 82.10. The euro is down 23 at 132.18, and the yen is trading out there at 98.17. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, what do you have? Let's take a look at it. Watch out, folks. We are at 1629. Okay, so check it out. Get to a price point today of 1640. You close at 1628. The swing point here is 1627.40. Guess what? We have a Friday going into a Labor Day weekend that you shouldn't have an expansion of volume. And guess what? You're slamming against the lows with volume expanding. What does that mean? That means the market, number one, wants to jump the creek, the small creek that's lined up here in the S&P. The cash S&P is at that 1628 area. It wants to go, well, it already confirmed to us on Tuesday that's an ABC structure on the way down. Specifically what that means is that you broke a B point, you broke it with volume. It has a separate, smaller ABC structure inside the larger ABC. So the setup, folks, is Tuesday, Wednesday, Thursday, we're going to be down to 1588 on the cash S&P. Right now, you're at 1628. Dow Industrials, we go take a look at the Dow. What you have with the Dow is this. Dow gets down to a price point today of 14,762. You're slamming into that with volume expanding. The Dow itself, folks, okay, got right into the top of that June 24th bar today. I suspect what you're going to see is going to get down to the bottom of it. NASDAQ Composite. We take a look at the composite. What we have with the composite is running out right now at 35.89. Now, the composite, folks, has not got inside the May 22nd benchmark yet. That number is 50 points lower. Went down 30 today. It's 50 points lower. I expect what you're going to see on Tuesday, but it could be Tuesday or Wednesday, probably Tuesday, is you're going to see it jump the creek and get right into that level. We go take a look at the ETF structure, and I can show you how the correlation in volume is slamming into this. We take a look at the SPY. The SPY today did 120 million shares. It's like, oh, really? On a Friday in Labor Day? That's going into the swing point of 108 million shares, folks, okay? The odds of that, were not there. Bottom line, it's doing it. What does that mean? That means money managers are not only getting out of town, they're getting stock. They want to get out of stock before they get out of town. So, SPY, that little baby wants to run down to the 155 area. Right now, you're at 163. We look at the small cap area. What you have with the small caps, bottom line, 38 million shares, and she broke the swing. The small caps, toast, roast, get the cream cheese out, get the peanut butter and jelly out, get the whole ball of wax out. That had a nice little bounce yesterday. I know a couple tigers, I was explaining to them that it would be nice if it could get a little more of a bounce. Bottom line, she broke down, and the IWM right now is at 100.38. She's going to be running down to the 93 area. Gold contract. Let's go over and take a look at gold. Okay, so this is what we had with gold out here. Gold down $18 today. We are at 1,394. We did 123,000 contracts. Okay, so the gold market, folks, did exactly what it should have done. You know, we had got to the lows, we tested the lows, had lighter volume, did the A structure coming off, nice wide price spread, accelerated volume, pull back. The first expansion up, brought you from the low of June up to the high of July. Pull back with lighter volume, did the next leg up. Now, what do we have now? Okay, we're at 1394. What I expect you're going to see now is that you're going to get a pullback somewhere into the 1300, 1330 area. This Tuesday morning at 7:40, folks, I'll be on CNBC bisecting and dissecting gold. But you know what? For all you tigers and tigresses out here, we're going to bisect and dissect the whole thing about gold, the dollar, okay, right now. So I can show you and tell you exactly what I'm going to be talking about first before I'm talking about it on CNBC. So check this out. Okay, so first off, I want to show you the gold. That's where I'm thinking gold's going. Now I want to go over to the dollar because I'm going to do this correlation. I want to show you this correlation, and the correlation is going to be gold, the dollar, and the bond market. Okay, so I'm going to show you how you put this together. So gold, 1313. Now let's go to King Dollar. We take a look at King Dollar. So what we have with King Dollar is this. She had the wide price spread yesterday, accelerated volume. The dollar index right now is at 82.10. So at 82.10, that broke the downtrend out here that started in July rather. That's saying that, okay, now the dollar wants to run to 85. If we put the dollar on a continuous contract, what you're going to see is that the amount of retracement in this whole sideways movement has been very minimal. You know, the dollar made its low in 2008 at 70. My take is that you're not only going to go to 85, more than likely we're going to see this move to 89. Okay, so now in the context that we look at, can gold go up and the dollar go up simultaneously? You know, we've had this conversation throughout the years. I've had the gold report 12 years. The first time that I saw that correlation that it actually could happen was when Egypt happened. But something really clicked basically the last 3 or 4 weeks. And this is what it is. So check this out, folks. This is really cool. I'm going to bring the dollar back up again. I mean, the gold back up again. And so when I bring gold back up again, if you happen to watch on Tiger TV, I'm going to bring this back. I'll bring it back 12 years, okay? 15 years. It doesn't matter on the monthly. I'm going to show you the correlation inside different currencies, because what has happened is this. King Dollar, folks, is going topside in a big way. Currencies across the world are croaking big time in correlation to the dollar. The rupee, okay, if you would likely heard about it, is getting destroyed. Well, when we bring up gold in rupee terms, guess what? You are at highs. So everyone in India, which India is the largest buyer of gold, that's how they hold their wealth, thank God. And throughout the centuries they do that because they know their governments destroy their currency, which they're doing again. And guess what? They're getting rewarded. Why? Because they're at highs. We turn around and we can take a look. You can take a look at the yen. The yen's getting cheaper. Guess what? The yen and the correlation, there's only 2 or 3 months that bottom line was higher in that correlation. Brazil will be next. What I suspect has happened is this, and this is why my take is that we will see the dollar going to go in higher. Right now I expect gold little retracement, but that wants to run to $1,500, $1,600. The dollar wants to run to 89, and what that's all about, folks, that's all about other currencies cratering in the context of the U.S. dollar. Okay, now we're going to bring the bond into it, because this is written, so check this part of it out. Let's go pull up the bond market. Okay, so USU3. When we take a look at bonds, this is what we have. 30-year bond goes from a price point of 148 straight down to 130, okay? You know, goes up and bottom line, you know, comes down, it comes down hard. Last time with any volume on the way down, however, is at about the 138 area. The bond market has refused lower price. That's building cause right now to get into approximately the 140 area. And what I expect you're going to see is you're going to see bonds actually go back to highs. And you stay right there, because as soon as we come back, I'm going to explain that correlation, and we're going to tie the whole baby together. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.